Hi traders, this is Cynthia and I'm bringing you another training video for the Neon Breakout system. And in this video I want to show you how to use the dots, the line dots here, to manually trail your trades if you don't want to use my trailing EA. So this is, if I right mouse click on it, this is called price channel stop. If I click on the name, it shows you the name that I call it. I've called it this for years. These are values and settings that should not be changed. They're totally optimum. And it's set to sound alert mode 0. If you want it to give you a pop-up sound alert for the signal, then you have to change your sound alert mode to 1. And if you want to have it send you an SMS alert, you have to change that to 1. And then of course, if for the SMS alert, there's another training video of how to set up your MT4 with a Gmail account to send you email and SMS alerts. So this is my signal entry stop. I call it SES for short. And it has the dots that are usable for manually trailing your trades. And this is actually what's called a chandelier volatility indicator, and chandelier trailing stops are probably the smartest type of trailing stops that you can use because they respond to volatility. So when the volatility is very strong, the way I have the settings anyway, it shows that the dots are quite a bit away from the price action. So you can see there's quite a bit of space between the candles and the dots. This is when the trend is moving very strongly. Volatility and momentum are very strong. And even though we're looking at this in an advanced chart, these SES dots are on the basic template also. So what I'm going to explain to you applies to whether you're using the basic template or the advanced template. It doesn't really matter. The principles are the same. So here you have your entry right at approximately this major key level, the sweet spot 148.50. That's like a major key level, and you have two arrows and the hot dot. This is the hot dot that gives you a pop-up alert. And so when price action breaks below the bottom of this box, which this is the colored box indicator considers this to be support, you're going to get one breakout arrow for the breakout reversal box, and then of course everything is pinkish reddish, and with two arrows and the hot dots telling you to sell. And if you look down here in the volatility window, the zero lag MACD volatility bar is very strong and pink, so that's a perfect entry. And you also have, at this point, this is the price channel stop, which is my signal entry stop. I call it SES. And that appears also, and that gives you an early entry also. This gives you, the settings give you the absolute earliest entry because the colored box needs price to break below a certain previous support line before the colored box even appears and before it gives you an arrow for an alert to sell or buy, in this case sell. And then the entry arrow can be a little lagging too, but the hot dots is usually the quickest to recognize an opportunity for buying or selling. So the hot dots would usually show up first, then the SES dots would show up, then the entry arrow would show up, and then the colored box entry arrow would show up. So pretty much it happens in that order, even though this is a 1 hour chart. So this is a 1 hour candle. It looks like everything, all of the arrows and dots appeared at the same time, but usually they don't. Sometimes they can. In this case, this was a really strong move to the downside. You can see the volatility bar, the momentum bar is very, very strong. So it could have been possible that all of these dots and arrows showed up at the same time. But even if they didn't, one of the first dots that'll appear is the hot dot and then my SES dot. So that gives you just, these two together give you a great entry. And so then each hour you can move your trailing stop. Just come in here and move your stop, and you can drag it right on the chart. The market's not open right now, so I don't have a trade on to show you, but you would just double click on your trailing stop right on your chart and just drag it down to this SES dot. Then the next hour, if you're around, come back and do it again. And then the next hour, come back and do it again. And because you had sort of a retracement here, definitely a retracement here, the SES dots are pretty flat. They're not showing too much of a trend, and momentum can be strong. However, there's not too much of a trend going on because of this two candles that are kind of a whipsaw. But then the trade starts moving down really nicely on this 1 hour candle, and this is where the price candle actually hits this minor key level of 148. Well, actually that's a major key level. 148 is the most major key level because it ends in 00. So price pushed down very nicely and touched the major key level, and at this point the price starts to really move down nicely, and so the SES dots start to follow. The momentum is still pretty strong, so there's still a lot of space between the dots and the candles. But here, when we have this retracement candle, the SES dots become very close, absolutely flat, which is showing you that this volatility indicator and trend indicator is showing you there's no trend, there's no volatility, there's no momentum. The dots are super close and showing resistance to the candles, and of course everything's confirmed with the mixed colors of your other two trend lines. And of course this would have been your exit right down here when the yellow line crossed the red 0 line. So you had an early warning that price hit the bottom of the Donchian channel support, and the candle tail had actually touched this sweet spot of 147.50. That's a major key level. So price literally bounced off the major key level, which happens to be the support, and then started to go up, and you had the blue hot dot to show you a reversal of trend, because the hot dot shows you the tops and the bottoms of current trends, and they can be used as an early reversal alert. So sure enough, price just climbed up on this 1 hour candle. If you had been moving your dot from here to here every hour on the hour, at some point the tail of this candle actually touched the SES dot and it would have stopped you out. So you would have gotten stopped out right about here somewhere, which means that you might not have bagged so many pips, because this was actually a short trend. Let's see, if you'd gotten in at the top of this candle, which is optimistic, and you had gotten out at the bottom of this candle when price touched the major key level, that's 95 pips basically. But if you had allowed your SES trailing stop dot to get you out, that would only be 38 pips, or maybe 40 pips if you're lucky. But here's the major key level, so price just broke up and touched the major key level again. So you could have possibly bagged 40 pips if you had been moving your trailing stop dot by dot, and when the market reversed here, the trend reversed, this would have naturally stopped you out. Now, it's better than giving everything back, especially if you're not at your computer. It's not ideal, but some people just don't want to use a trailing EA. And if you don't, this is a way you can use the SES dots for your trailing stop. And like I said, it's not ideal. You're not going to bag the optimum number of pips that you had the potential to bag. It's always better to at least once an hour come and look at the trade, and you would have seen price bounce right off this major key level if you're using the advanced template. If I had seen this arrow alert showing me prices bounced off, and then especially the blue dot appears pretty early, and then your other tip is in the bottom window, you have your two divergence indicators. The yellow line is slanted, and once it crosses the zero line, that's definitely when you want to get out. The cross of these two lines way back here shows you potential bottom. The price did go a little bit further down, and then the wild hog changed color. When the wild hog changes color after it's crossed with the yellow signal line, that is your absolute indication that price is reversing. And when the wild hog changed color, and especially when it crosses 30 RSI level, that's another indicator telling you to get out of your trade. And so all of these lines in the bottom window give you early exit so you can bag the most pips. The last actual type of trail you want to use is the SES dots. It's really only for if you don't want to sit at your computer, monitor the trade, at least come and look at your trade once every hour. I think that's prudent if you can do that, or let the trailing EA trail for you. So the SES dots would be like, I don't know, the least successful way to trail your trade, but you can do it. So you can see here that it shows you that volatility and trend is absolutely flat. There is none. Mixed colors. This is a total no trade zone. Of course, this is the end of the day on Friday, so that's not surprising. People pushed the price way down and then took their profit. And right now, there's no clear trade signal. But of course, you look down at your GMACD, and the trend for the month has been down, for the week has been up, for the day has been down, for the H4 it's been down. So we don't know what's going to happen when the market opens Sunday night, but depending on, because the daily trend and the H4 trend has been down, I would think that maybe this would keep going down a little bit. So we don't know. At this point there's no way to tell because the weekly trend has been up. So it could still continue to go up, but until the market opens and we get some price action, this just tells you what it was happening Friday at the end of the day. And this is 5 p.m. This is your period separator for your advanced template. And so that's it really for the training for the signal entry stop or the price channel stop. You can call it whatever you want. I call it SES. So thank you so much for watching, and I hope this helps just a little bit deciding how you want to manage your trades, because I think every trade needs to have some sort of trade management employed. You can't just, place a trade and just walk away. You can do set and forget trades. You could have placed this trade and put in a 25 pip target because, well, between one key level and the next, that was 50 pips. So you could have put in a 50 pip target and it would have hit this target key level before it ever bounced up. You would have been out of your trade automatically with your take profit of 50 pips. So that's another way to trade with a trade management. So I like that very much. And so anytime you enter at one key level, set your target for the next key level depending on the time frame you're in. I do want to mention that in the advanced templates, I have 3 templates and they're all different because they're all based on the sweet spot, the key level indicator. I'm in a 1 hour template, so the key level indicator, I'll right mouse click and show it to you. This is the sweet spots gold and it's set for 50 pips. The sub levels are 50 pips. The sub level color is gold, so every 50 pips you're going to have a gold line, but every 100 pips you're going to have the magenta line, which is your major key level. So I would not change these. It's different for the 5 and 15-minute chart. You're going to have your key levels 25 pips apart, and you need that if you're going to be scalping, because you can scalp between the key levels of 25 pips. That's very doable. That's super realistic. But in a 30-minute and 1 hour chart, you have bigger potential for more pips, a longer trend. And so the key levels are spaced 50 pips apart. And in the 4 hour and daily chart, the key levels are spaced 100 pips apart, which give you bigger targets, bigger ranges, bigger trends, and you can make more pips in the daily and 4 hour charts with using the key levels to trade between. So if you ever enter at one key level, depending on the time frame you're in, set your take profit for an automatic take profit at the next key level. You can do this on the 5 and 15-minute charts and scalp really easy between 25 pip key levels. You can do it in the 30-minute and 1 hour chart. Just trade from one key level to another. You don't really need much trade management if you're using the next key level as your target. However, I like to use my trailing EA, and you can adjust the presets as you like, but I have quick scalp, day trade, swing trade, super swing trade. So you can use the trailing EA, which has a feature that it will book half of your lot at a certain point, however many pips you tell it to. It'll book half of your trade and then trail the other half of your trade. So I just love that feature. Even though it's set to book 50%, you could set it to book 80% of your trade and let the other 20% trail. That's even better. So the trailing EA is adjustable. And so this video is basically all about the different ways that you can manage your trades. There's so many ways to manage your trade, and you should try every single one, and you'll discover which one is most comfortable for you. And that's the important thing. This is how you personalize your trading. I'm just giving you different options and teaching you how to use different options, and then in the end you're going to have to decide what you like the best for your trading style and what you're comfortable with. So hopefully I'm helping with that. Thanks so much for watching.